What's up guys, Kevin Cage here with another crypto update. We're going to kick this video off with a must-see clip explaining how the game is played by the world's largest banks and institutions and why they want to buy crypto cheap. We already know at least a couple dozen of the world's largest exchanges and institutional banks that are entering the crypto market and opening crypto trading desks. Whether it's DeFi, crypto custody, or crypto trading. Organizations including Bank of New York, Fidelity, Charles Schwab, State Street, Goldman Sachs, BlackRock, NASDAQ, SIBO, DBS, Singapore's largest bank, Bank of America, Citi, Morgan Stanley, UBS, JP Morgan, HSBC, Sberbank, etc. And here's a quick clip of Tika Touare, and he was one of the youngest employees over at the Lehman Brothers years ago, explaining that what we're seeing in the crypto market is exactly what we've seen before with the world's largest investors.
On September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says he'll fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, so unethical.
Right.
Okay, George Soros.
George Soros, in January 24th, price was already down, calls Bitcoin a bubble, says Bitcoin is the worst, the worst investment in the world. Don't buy Bitcoin. Don't buy Bitcoin. Basically throws gasoline on the fire at this point. And then what do we find out? So he says bubble here.
It drops 44%.
Right. And then here in April, 2 months later, guess what we find out?
Yeah.
His $26 billion family office has approval to buy cryptocurrency.
Right. And we only knew about it publicly here. And this is the kind of thing that George Soros is famous for this, talking the sterling down.
Yeah.
And what did he do? He stole the pensions of all the little people.
Yeah, made $1 billion.
Yeah. Okay.
So then here now, Goldman Sachs, this, again, February 7th, most cryptocurrencies will crash to zero. Now, I remember when they said this in February, and I had, through my network, I knew that Goldman Sachs was setting up a crypto trading desk. Absolutely knew they were setting up a crypto trading desk. And
I remember you telling me that.
Right. And then, of course, they were denying it. No, we're not. No, we're not. No, we're not. Price falls down 27%. And then what do we find out? We find out here, they say BTC 0. And then we find out just before May, new trading desk. Not only that, they put $400 million to buy a cryptocurrency trading platform.
So that's an example of some of the world's largest bank CEOs and investors saying that Bitcoin will go to zero, then they proceed to invest $400 million into a crypto trading desk, and we have the world's largest banks opening crypto trading desks and starting crypto custody solutions. And George Soros is a multi-billionaire if this number is still accurate according to Forbes. It could be much more. They talk about all the donations he's made, but he's the same guy that broke the Bank of England and shorted the British pound and reportedly made a profit of $1 billion. So to every single person that says, Kevin, aren't you worried that crypto's going to zero because so-and-so said this? No, I'm not. When I see the media relentlessly bashing the crypto asset class during a bear market, this is made by design. This happens every single crypto bear market. This is because they don't want to buy crypto at all-time high prices. They buy during accumulation during multi-year bear markets when assets are at their lows. And I guarantee during the next bull run, they're going to market it acting like crypto is the best thing ever when a variety of alts are already up 5x from today. And this clip was from Digital Asset Investor, and also just emphasizing Gary Gensler, the SEC chair, worked at Goldman Sachs, had George Soros and Jamie Dimon meetings on his public SEC calendar. You always wonder if some of these Wall Street guys do in fact have some of these government officials in their pocket, and you have to question that. Next up, we have Ripple's James Wallace. This is the VP of Central Bank Engagements, giving a 1-minute explanation of central bank digital currency use cases, including wholesale CBDCs used by banks, retail CBDCs as an alternative to cash that can be used by us, and then cross-border payment CBDCs. And remember that Ripple is going beyond just compliance, liquidity, tokenization, and cross-border payments. They're focused on central bank digital currencies as well, and they're already working with several countries. And what's interesting about this is James believes that we're going to see hundreds of different types of use cases for CBDCs in the future. And remember that Ripple's CBDC platform utilizes the XRP ledger's technology. So as David Short says, it can connect and use XRP. The idea is to connect all of these large organizations and have XRP as an option. And the more everything is battle tested, they're going to want the cheapest option available, and it's likely going to be XRP. And a reminder that central bank digital currencies by themselves do not actually solve all of the problems that crypto can. Now, James Wallace of Ripple has also spoken at OMFIF's DMI Symposium for several years in a row, and OMFIF is absolutely huge. And Ripple, the company, is alongside some other crypto organizations: Visa, Microsoft, Meta, Accenture, AWS, Swift, etc. And OMFIF is an independent think tank for central banking, economic policy, public investment, etc. Teams in London and the US. We can see $43 trillion at the heart of this network. And this is an awesome clip shared by Darren of Brad Garlinghouse, Ripple CEO, discussing with Bloomberg, talking about their acquisitions, talking about the recent payment license from the Central Bank of Singapore directly. And he also shared that Ripple applied for a VARA license, which is Dubai's Virtual Assets Regulatory Authority framework, or their license. In a variety of countries, Switzerland, Japan, UK, etc., they all have regulatory frameworks that are already being built. And the United States has no regulatory clarity. If it was strict, Brad Garlinghouse said it's fine. If it's strict, we'll do it, we'll follow it. If it's expensive, that's fine. We just need clarity, not confusion. Next up for Hedera, they're excited to announce Hedera's Stablecoin Studio, the all-in-one stablecoin configuration, issuance, and management toolkit tailored for Web3 platforms, institutional users, enterprises, and payment providers alike. The Stablecoin Studio delivers a highly performant, seamless end-to-end stablecoin solution with proof of reserve, dedicated custodians, and network-native KYC AML flagging. And we can also see HBAR Foundation replying to this, shared by Brady. So this is end-to-end USDC, the stablecoin settlement via Visa and MasterCard through WorldPay, which is huge. So we have stablecoins, and what's interesting is, with proof of reserve provided by Hashport Networks, Axiom Oracle, this is all on Hedera's network. So it seems this presentation just took place in Singapore at the Token 2049 event by the WorldPay global team. So this is from WorldPay from FIS, and FIS is on Hedera's governing council, as we can see right there next to Google and IBM. And this proof of reserve service is powered in partnership with Hedera for traceability, auditability, uniform reporting, and reconciliation. Real-time and/or streaming settlement rather than batch-based, and end-to-end settlement stack that prepares for a potential world with central bank digital currencies. And what makes Hedera a very good contestant for the future of enterprise adoption is they have predictable fees just like Casper. They have high programmability and a robust network of ecosystem partners, stablecoin issuance, and management. And these types of platforms, including Stablecoin Studio for Hedera, are absolutely key. So all of this infrastructure is being built out. And you can see it's an open source SDK. We also know other organizations like PayPal recently announced their own stablecoin. So we're seeing organizations left and right creating their own stablecoin, but interoperability of these networks is absolutely key. So imagine other organizations, rather than using Ethereum for a stablecoin, leveraging Hedera, which is significantly cheaper, much more scalable, and much more reliable. Meanwhile, in this bear market, we've seen some alts retrace, but a variety of others are just still at their lows, down over 90% from their all-time high that was set in 2021. Injective, or INJ, has been a good exception to this. It did crash 95%, so that is absolutely brutal, but we can see retracing from its cycle low almost 800%, or roughly 9x from its cycle low. I cannot wait for other alts to finally start waking up again. We have to let time do all the talking because we're right about this asset class. And even considering Hedera's max supply in the future, it still wouldn't surprise me to see this behemoth and this organization connected to Google, IBM, Boeing, etc. reach a 50 billion plus market cap with actual utility. Remember, we do not have regulatory frameworks globally that are fully in place. We don't have enterprise adoption entering at scale and using these applications at scale. So we have not seen what actual utility of these networks can do at scale. We've seen little taste and teases with bull runs and Bitcoin pushing to an all-time high, but we haven't seen the actual floodgates open. And you can look at the HBAR Foundation's website. They've invested over $400 million, and they're building dozens of enterprise applications in a variety of different ecosystems. And it's exciting to see which applications are going to succeed in the L1 space. And if you think a 50 billion plus market cap for Hedera in the future is crazy, I don't know what to tell you, because we've seen this before with other assets before regulatory frameworks and actual adoption at scale. We've had Doge, Solana, and Cardano already reach an all-time high market cap of 75 to 99 billion, and that was last cycle. And the thing about enterprise blockchain adoption, this is the largest and least penetrated market in the world. The sales cycle is slower, testing takes longer, setting up customized permissions for all the users and roles is a lot more complex. But once these applications are live and they're actually scaled up, the use cases are not only orders of magnitude larger than retail use cases can even imagine. It's just so much more money in the institutional space. It's a lot stickier and likely to be used for years. It's not something that's just going to last 1 year. If they put and invested all this money to set this up, they can arguably save millions or billions of dollars per year. Just like cloud computing services save enterprises 20% annually on infrastructure costs, It's going to be a very similar thing from blockchain. To improve security, to prevent fraud, to get rid of all of these middlemen and lower the fees overall and improve efficiency and allow them to make more money. So enterprise adoption, it starts super slow, then it happens fast. It's like a snowball going down a hill, gathering momentum and growing exponentially. We already know one single enterprise application could process more transactions than the entire Ethereum network. And Ethereum is an absolute behemoth. It has tons of ERC20 tokens. It has a rich ecosystem of wallets, liquidity, DeFi applications, and smart contracts. Bottom line is we're so early in this race, and it's hard to know who are going to be the main winners or the couple dozen winners in the years ahead. And I also wonder, what if there's going to be even bigger winners that haven't even arrived yet or haven't even been created? And these enterprises are building hybrid deployments. This is Web 4.0 with networks like Hedera and Casper Networks, specifically using partners like IBM, Cisco, and Accenture. So they connect to the ERP system in their databases, and they make all of this seamless. And these networks can have private instances that are secured to these public chains, which require the token for computation. We know the tokenization and volume estimates between 2027 to 2030 by firms like BCG and even Swift. So although prices haven't done anything for 2 years, global adoption is taking place now and the builders are building. We know Casper 2.0 and their upgrade is on the way. Right now 1.5 is good to go, and Casper Network is the only layer 1 blockchain to enable debugging of live composable smart contracts on their mainnet, which gives enterprises more control and increases the utility of public blockchain infrastructure. And Casper is the only network that enables upgradable smart contracts by design. I know a lot of people probably skim right through this, but notice, which gives enterprises more control and increases the utility of public blockchain infrastructure. Enterprises need very customizable offers. They need special permissions for their accounts and contracts. Ethereum is not capable of this. Now, regarding Nucleus Finance, a single application on Casper's network, you can learn more at nucleusfinance.com. They're working with the Actus standard. To my knowledge, Ethereum, ADA, some of these other projects have looked or worked at Actus, but none of them have actually made substantial progress. Casper Network, to my knowledge, is the only one actively working with the Actus Foundation. For everybody that knows, the ISO messaging standard, Actus is one of the big three alongside ISO and FIX. So these are some of the 3 largest standards in the financial world. And I need to emphasize that Nucleus Finance is built on Casper Network. They speak at DC together. This is a big use case. Nucleus Finance and WM. Service are partnered together to focus on the digitalization of the security sector. This is trillions of dollars. And this leverages Casper Network, as we can see Casper Labs right there, smart financial contracts. WM. Service is the central authority and data provider for the global financial market. So when you see the central authority and data provider for the global financial market, some of the heaviest hitters throughout Europe, this is very impressive. And here's a quick clip from the recent Actus Financial Research Foundation conference shared by Casper.
Actus is a standard for financial contracts, which enables you to define all the terms of a financial contract, and from which you can algorithmically determine all of the future cash flows of the contract. If regulators had access to fine-grained Actus descriptions of the holdings of the banks they were regulating, they would be able to do much better forward-looking analysis of different changing risk scenarios in the future.
So a reminder that the financial contract industry is in the trillions of dollars, and this Actus standard alone accounts for 98% of all financial contracts, so basically all of it. All types of loans, all types of insurance, commodity contracts, foreign exchange contracts, etc. Now, why is this important? Well, we've had dozens of bank collapses over the past few years because they had no insights into their cash flow. When this is tokenized, audited, and automated, you get much better visibility. And it's not a matter of if, it's just a matter of when all of these banks and organizations actually tokenize their cash flows and get visibility. The question is, which L1s will have the most success in doing this? If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.